I'm not going to lie, I slept like a baby last night. But if you are worried about the market, spend 5 minutes with me and I'll tell you where we are going next. Okay, bit of a rough weekend. I managed to find the mains cable running through the house in this video. So, mains, all the spider webs, and then you go along here, you got this electrical cable that goes and disappears behind the wall. I'm hanging a door, so I screw multiple attempts to get a door to hang. Come down here, there's another bit, and that middle screw went into the wall behind this into the mains power of the house. Managed to screw through it, so I lost power, I lost internet over the weekend, bank holiday in the UK. So I had trades open and no secondary way to trade. So I had to learn very quickly how to set my mobile up. A bit of a trader's newbie mistake, but I managed to resolve everything. But yes, a bit of a scary weekend. I went something like 15 hours without internet, without electricity. A trader's experience, never going to happen again. But with that said, let's move on with the charts. So this is the activity from over the weekend. Now while it looked like we kind of went sideways, this was last Wednesday, and then we dropped on Sunday. So this was the activity I was in, because we effectively went sideways. And this is what the market does. It gets to the weekend. This is Friday afternoon when the Forex markets are quietening down. Gets into the weekend and out of the weekend. So we go up and we come down. The market came down Monday, which was the bank holiday. So it did come down, and it tends to, in my view, it will drop out after the weekend and come back up. So I'm expecting highs back above 1855 on Ethereum, because I basically sat in this most of Monday. But I'm expecting the market to come back up, and sure enough, we've got order blocks and support at 1813. Now, the things that might drop us below 1800 is the FOMC meeting this week, which is tomorrow evening in about 36 hours time. So the more jobs that are available, which is 9.74 expected, if it's more jobs available than the 9.74 million, the better for the US dollar. So I always say this: if it is good for currency, I pop over to the US dollar, and at the moment we are seeing a slight increase in the US dollar, which is incidentally pushing ETH down slightly, and obviously pop over to Bitcoin, and it's pushing Bitcoin down slightly too. So we have had about 1% rise since yesterday. So literally heading towards late Monday evening in the UK, we had just over a 1% rise in Bitcoin. But considering we've had quite a large drop from top to this move, so that's 6.5% down, we were 7.5% down. So there has been a little bit of an increase. And I would like to see Bitcoin get above the 28,200 to start feeling a bit more comfortable, a little bit more bullish, and I'd like to see us break that wick at 28725 to start feeling comfortable. Now, if the FOMC meeting shows a 0.25 basis raise, then I'm expecting to be above this and back up to 29, maybe even 30,000 by, well, over the next 36 hours. And if that is the case, then I would also be expecting ETH to be pushing up towards the $2,000 mark. So the last time Bitcoin was at $30,000, ETH was at $2,000. So I would be expecting it to jump up. Now, worst case scenario, let's say the basis points is 0. The government have decided to look after the banks to stop the banks collapsing. Then we could see ETH push down to the 1738 area, which I've had this marked in for a while. I had this marked in last week. I did mention that level last week as being a little bit of a danger area. We could also push down to collect these order blocks. Now, the worrying thing is, it's something somebody pointed out to me yesterday, is if we put the 4-hour chart on, look at all of that liquidity below the price. So if a disaster was to happen tomorrow evening, we could be collecting some of this liquidity tomorrow. Now it could hit any one of these and keep crashing through the floors, and scary levels at $1,200 Ethereum, which is very scary. Again, over to Bitcoin, 4-hour chart. Let's zoom right out, scrunch up the order blocks, and again down to $16,000 Bitcoin, 18,000. Now I do think, and I said this a couple of months ago, that we would have to collect these order blocks before we head up to the actual bull run, which is going to be about February or March 2024, when the halving starts for 10 months. So I would think that we have to come down and collect all these first before February next year. But that could happen in June of this year, it could happen in February next year, but somewhere in there I think we will actually come down and collect all of these order blocks. A little bit scary, but my theory behind this is that when we were down at $15,500 Bitcoin, there were no order blocks down at the previous prices. So as you can see, there's no order blocks down here where the price has been previously, and obviously where the price has been at the top of the bull run, there are order blocks here. So I think we will collect these at some point. Again, I'm not saying in the near future, but my theory is that there's no order blocks down here, so we do have to collect these before we go back up. Not necessarily before we go up, but before the next bull run. Let's remove these. So looking at market cipher on the price prediction, so we're currently at $28,000 Bitcoin. Market cipher is showing momentum waves to the downside, but the cash is above the 0 line. We're showing a slight momentum up, but it is decreasing, which could suggest that the bulls are exhausted already, and we've only had this little move. So we've only, since the 25th of April, we've only had a 9% rise out of Bitcoin, but we've pretty much lost all of that. So the cash didn't stay up for long. The momentum waves are decreasing. So on the 4-hour there is bearish divergence. Now if this momentum wave was to come up, we could see the momentum wave come back up to these levels, and it's not uncommon, you know, it happens back here as well. The momentum waves, although this decreased, the momentum waves do come back up. If you see here, they do decrease, and then they get larger again. So it's not uncommon for it to come back up, so long as this cash stays above the 0 line. So that's what I'm seeing at the moment. A slight decrease in the bull activity, a slight increase in the bear activity. But if you look at where the momentum waves were, the bears are not actually pushing the candles down that far, considering how big this is. So as long as that cash stays above the 0 line on the 4-hour, I would actually suggest that it's more bullish than bearish, and we could see the market go up from here. So next 36 hours are quite crucial. FOMC meeting, job lots, and then let's see where we go from there. So if price breaks below 28,000, we could see 27 in the short term. If price breaks above 29,000, we could see 30,000 in the next 36 hours. Keep watching, guys. I'll do 2 more updates by Wednesday evening in the UK. Keep watching. I'll see you guys in the next video. Bye bye.